from our world headquarters in New York. Good morning, everyone, and worldwide on Bloomberg Radio and Bloomberg.com. And hello to Carol Masser and all on Bloomberg Television as well. Mohamed El-Erian with us, just off an airplane from Brazil. Mohamed, my colleague Simon Kennedy in London calls it South-South trade. Are you seeing in Brazil and in the Southern Hemisphere countries, these commodity-based emerging markets, are we beginning to see them feed on themselves and generate demand off themselves rather than the original colonial nations?
Yes, Tom, we're seeing them rely more on domestic demand and on regional demand, and that speaks to the fact, and I would call it a fact, that countries like Brazil are in a developmental breakout phase. They're able to sustain high growth, wealth accumulation, and greater resilience to external shock. It's pretty impressive what's going on in some of these countries.
When you see these countries, we worry about best practices of law and of contract and of financial systems. Do you see improving and deeper financial systems to go along with the prosperity?
You do. It's a development process, so it takes time.
Yeah.
And you're seeing a maturation of institutions, both in the private and public sector. So in the public sector, you're seeing much more fiscal responsibility, more respect for the rule of law. It's not perfect, but it's making progress. And on the private sector side, you're starting to see Brazilian companies becoming big multilaterals and being able to compete on the global stage.
One of our stories this morning, Mohamed, is that high-yield, high-risk bonds, junk bonds, are rallying by the most in 4 months. Do we want to go ahead and take this as a sign that risk aversion is off and people are desperate for yield after all this time?
Yeah, you know, the market will always look for return. The market will worry mostly about the return on capital rather than the return of capital. So the minute someone puts out a green light and earnings constituted the green light, you'll see people rushing back into risk markets, be it the equity market or the high-yield market. And the issue, Ken, is will it be sustained? And for that to be sustained, we need continued improvement in data and continued improvement in top-line revenue.
And are we going to get that?
I think it's uncertain. The indicators we look at, and I know there's disagreement on this, but the indicators that we look at suggest that the economy continues to lose momentum. So we are more worried than some of the other people you've had on your show recently.
Well, there's a mix here. Mohamed, I see the Spanish spreads come in. You see Spain minus the German 10-year spread come in. I mean, it's essentially all success on the stress test. Do you signal all clear for Europe?
You know, the stress tests were important. This is typical Ekoloff, Stiglitz, Spence issues that you had massive information failures.
Yeah.
People weren't sure what was going on. They couldn't differentiate between the good and the bad. And what the stress test did, importantly, is they disseminated information to markets and to the public.
But what would you like to see more? This is absolutely critical. If you get off of Stiglitz Nobel laureate effort, folks, on information, what new information does Pimco need to see to have confidence in purchasing Greece or Spanish paper?
A couple of things. One, at the level of banks, is the what next? Will banks then move to enhance their capital, in some case merge and strengthen? And then more generally, let's not forget that Europe is not about banks. Europe is about sovereign risk and about the inability to sustain high growth. So unlike the U.S. a year ago, when the problems was in the banks and governments had room in their balance sheet to support the banks, Europe, the problem is not.
All right, Mohamed El-Erian of Pimco, the Pimco CEO, they are talking with our own Tom Keene and Ken Prewitt in Bloomberg Radio.